Hi everyone, I'm Stephen Burk, NotYourBoringAgent.com.
And I am Jessica Cialella, mortgage lender. Welcome back. We're going to say hello to everyone again.
How are you?
Today, this week, we're going to be touching on, now that you have been pre-approved, the different loan types and options that are available to you, kind of dispelling some myths, understanding what comes next in the process. Lots of fun.
So yes, so I think the first one that's most common is going to be FHA financing, and going over what FHA financing is and the misconceptions that some people may have about them.
Absolutely. So because we are working on helping first-time homebuyers understand what their options are a little bit better, we will start with this loan first and foremost because it's often nicknamed the first-time homebuyer loan. So is it only for first-time homebuyers? No, absolutely not. It tends up being the most likely option for those doing so. An FHA loan, it stands for Federal Housing Administrative Loan, so it is a government-backed program. You can do a minimum down payment of 3.5% down of the purchase price. Now, this loan is typically going to be a better suited loan for those with a credit profile between anywhere from 600 to 680, 690, teetering on that 700 scale. They may have more debts on their credit report, a little bit more flexible. You know, you have student loans, you kind of coming out of school, getting, wrapped around home buying, getting ready to dive in. And of your payment, you're going to have typical standard principal, interest, your taxes, insurance, and mortgage insurance. Big differentiation between an FHA loan and then bridging into conventional loan. FHA mortgage insurance is based upon the loan amount and loan size, yet a conventional loan, it is calculated a little bit differently. So we'll kind of dig into that. Do you find that most first-time homebuyers are coming to you with FHA pre-approvals?
We're seeing FHA a lot, especially there are some restrictions on the purchase price of FHA and VA, so we want to make sure that if you're doing an FHA or VA loan, which we'll get into shortly, is that we're looking in the right prices for the different areas in the county.
So the county caps it, that's what it is. It doesn't necessarily have to do with Stephen as an applicant, but if you're shopping in Hillsborough County, the government will put a cap limit on what the loan size could be to go FHA. Now, should that not work out for you, if you find yourself maybe you did an awesome job with taking care of credit, you are minimal debts carried on your credit report, maybe you are a first-time home buyer but you want to go conventional. Sometimes people, they want to get right into a condo, so we often find they want to do a conventional loan. Conventional loan is typically, you'll find as a first-time home buyer, you could do 3% down of the purchase price. Standard down payment ranges anywhere. You could do 5%, 10%, 20% is the golden number, just because there's no mortgage insurance carried with it, but it's not required. We kind of get a lot of questions often. People are like, I need 20% down, and we'd be waiting for quite some time for people to get to that point. So you have plenty of options as far as that goes. Put yourself in an optimal position with conventional, you're going to want to position your credit to be above 700, I would recommend, solely for the basis of mortgage insurance, keeping that nice and low. It's risk-based insurance, so if you've got a higher credit score, minimal debt-to-income ratio, everything else otherwise looks good, you can expect your mortgage insurance will be, therefore, rewarded because of it. So.
And that saves you at like $100 a month, if not more.
Yeah,
I would say
really
mortgage
depends
insurance.
On the property. So it's a good thing to dig deep into. And then lastly, of course, VA loans. So we always, first and foremost question is, okay, are you a veteran of the U.S. military? You must be, unfortunately. Yes. I'm not, Stephen's not. Nope. We get left out, but there are many amazing people that do qualify for this program. So that is 100% financing, assuming that the veteran has not used any of their VA eligibility in the past. Now, this is kind of side note, people often ask me, can I have 2 VA loans at once? The question is yes. It's, of course, you can't buy them at the same time. It gets kind of, that's where we get into some no-no area. But should you buy a home, it's your first property, you bought it as a VA loan, then 2 years later, your family's growing, you want to move somewhere new, whatever happens, you can then take out another VA loan. Should you be qualify to take on a secondary one with 100% financing, you can do so. So it's awesome. There's a lot of options there as well, and no mortgage insurance on VA, which is absolutely amazing.
VA is like golden.
Yes,
it's amazing if you have the opportunity to do it.
Yeah. So, and then lastly, we left this for last, not to discredit it, USDA, but it's just we find that we're so far from where properties actually are eligible for that. It's a rural housing program.
And we don't necessarily see that often in the Tampa Bay area.
We used to, but now the maps just keep getting
keeps
pushed
on spreading.
farther and farther away. So
as Wesley Chapel grows and North Tampa grows, Riverview, Apollo Beach, those areas they don't really qualify for that type of financing at this time right now.
And a thing to note about that, should you come across a property that is USDA eligible, you can look it up online. You just go to USDA eligibility map. You will have to also note that there are some income restrictions, so you can't, be taking advantage of USDA if you're in a certain income tier. It gets to a bracketed point where they'll kind of cut you off there.
Yep. And as always too, as an agent, I always try to get my seller's closing costs covered. So usually that's 2 to 3% of the purchase price of the home is for closing costs. And I will usually ask the seller to pay for the closing costs. So it's an extra 2 to 3% that you can put towards your down payment to save yourself some PMI if you're on the border, or to have some extra cash in your pocket.
Go on, decorate the house, make it look nice and pretty. But yeah, we'll dive into that. We're gonna do closing costs, dive into the fun world of that on our next video.
What happens when you get your pre-approval, you know what your qualifications are, and next week we're going to discuss what happens when you go under contract.
Yeah.
So look forward to joining with you next week.
Thanks, guys.
Take care.
No swipe up, not yet.